Hello, hello, hello. What's going on, everybody? Welcome to a Capital Hungry Monday Market Update webinar. Through this webinar, I'll be taking my time giving you guys analysis and trade ideas on gold, GBPJPY, GBPUSD, EURUSD, USDCAD, and US30 stock market index, while first looking at what fundamentals are in focus, market sentiment and investor behavior, current volume and volatility reading, any important headlines, as well as what economic data reports we have on the table to focus on as well. Okay? So first, let's look at some key points that we have to understand as manual retail traders, because these current conditions and current fundamentals in play will be impacting our bias, our trades, and everything else down the line. Okay? So number one, we have to understand that we are in the start of a new business month period. This means that we're seeing a little bit less volume and volatility, as a lot of the fundamentals from the previous month, including the signals of rate hikes by the Feds, the actual Fed FOMC, other central bank monetary policy sentiment, and so forth, a lot of this information has been priced in. The main reason why US dollar has been so bullish over an extended period of months in the near term has been the market adjusting and pricing in expectations of rate hikes to come. So before the actual July FOMC, dollar was extremely bullish, as the expectations of a 50 basis point rate hike were already well known and very high probability, and the same thing with the 75 basis point hike. As we winded down the month of July and had the actual FOMC take place, you can see this led to a buy the rumor, sell the news type of impact on the dollar. In the short term, dollar has just been a bit more bearish, as we're having buyers liquidate positions from the highs, a priced in FOMC and interest rate information so far priced in, start of a new monthly business period. So we're getting that order flow set up and currently seeing a lot of pullbacks and corrections of higher time frame trend across the board. So one thing I'm going to identify to all of you is when you look at pairs or you look at trading instruments like gold, the higher time frame structure is bearish, but we are short-term bullish for the reasons I'll be explaining to everybody down the line. Same thing with GBPUSD, same thing with EURUSD, same thing with the US30 stock market index, where we're currently in a short-lived bear market rally. Just some minor pullbacks and corrections of the higher time frame trends across the board. So we also want to keep in mind that we have worsening global economic data, and majority of global countries are in an active recession. Regardless what the media or what the politicians are telling you, when you're looking at global PMI figures, inflation data, consumer confidence, industrial sector, retail sector in countries, we are in active recessions, and we have been in these active recessions ever since the stock market peaked its all-time highs, and we had the central banks from major countries starting to enter more of a hawkish tone, starting to raise interest rates, following suit with the Federal Reserve. We also have some geopolitical tensions rising as well, aka Taiwan and China starting to get pushed more by instigation points from the US. We have had China make it very clear. We've had China make it very clear about their rules and their designations regarding Taiwan, and how other countries get involved and start pushing their sovereignty and pushing their barriers. And we also have Nancy Pelosi going over to Taiwan pretty much today, Tuesday, and spending the night there. So if we see any type of political triggers, we can lead this to some retaliation from China and even instigation beginning, where an invasion of Taiwan is looking very high probability in the near future. I was personally predicting China will start invading Taiwan from a physical front January 2023. But maybe it can start even sooner, depending what Pelosi does over there. So, main fundamentals in focus. Keeping in mind lower volume and volatility as we're starting a new business month period. A lot of the central bank fundamentals and rate hikes already well known and already priced in. We're currently seeing pullbacks and corrections of higher time frame trends across the board. Global worsening economic data, which is keeping Japanese yen a little bit stronger. Geopolitical tensions on the fence regarding Taiwan, right? Some news headlines that support this is before the month ended, July 31st, we had some headlines from China specifically stating that China Air Force on Taiwan will resolutely safeguard national sovereignty and territorial integrity. AKA basically saying in simple terms, if y'all want to come fuck with Taiwan and fuck with our plans that we have over there, we're going to fuck you up. You know what I mean? So keep that in mind. Also, we had last night Eurozone PMI figures at 49.8. Any type of PMI figures, whether it's manufacturing, industrial, services sector, and so forth, when these PMI figures are coming out below a 50 grade point or are consistently sitting at low 50 grade points, this is economic signals towards recession in very weak economies, and Eurozone is suffering heavily. And the headline today around New York session 10 a.m. Eastern, Nancy Pelosi will visit Taiwan on Tuesday and spend the night Taiwan media, and we're going to see if that brings any uncertainty. It's going to be fun. You know what I mean? If she does cause some shit over there, if she does poke the bear, which is China, if she does cause some instigations, then we'll have some market fear. If we have any new market fear regarding Taiwan invasion, this is a catalyst that would bring Japanese yen strength, individual dollar strength in the short term as a safe haven currency and world reserve currency, gold bulls further, and would bring some short-term downside. When we're looking at the equity markets. But so far, nothing has actually popped off yet. We're starting to see it bubble, but nothing has really popped off yet. It will be fun for us, though, as day traders to stay adaptive. Now, market sentiment as stated. Dollar in the short term is bearish. Obviously, we understand if you follow my webinars, the higher time frame analysis, the market updates. Of course, US dollar is bullish on the higher time frame as the market has been pricing in and adjusting rate hikes to come by the Federal Reserve, which is a bullish fundamental factor and information advantage for more buy-side liquidity in the dollar, more demand in the dollar. But the market moves in waves. As that information has been priced in, as buyers are liquidating positions from 20-year highs, we're entering a short-term bearish pullback phase on the dollar, which I'll of course explain to you individually when we look at the dollar index. Japanese yen, same type of idea, but the higher time frame is very bearish because the Bank of Japan, unlike the Federal Reserve, has been a lot more dovish. They've been keeping their interest rates in the negative. They've been keeping their unlimited bond buying program and stimulus support for their country active. But in the short term, as a lot of that information has been priced in, and even last week we had some more hawkish remarks from Bank of Japan representatives, we have some short-term strength in the yen, which is just a pullback from the lows, sellers liquidating positions and buyers providing that exit relief. Equities and global stock markets are having some short-term bulls, where if you understand what I've explained to you in the higher time frame US30 webinar, which is you can watch it anytime you want for free on the Capital Hungry YouTube, that whenever you have a bear market in stocks, because equities are generally designed to go up and only go up in value, with only any downside on equities being short-lived, whether it lasts a year, months, or weeks, and being related to negative fundamental catalysts, whenever you have a bear market on the equities, you always have what is seen as bear market rallies. You can backtest the year 2000 on the NASDAQ, 2008 GFC, and current bear structure we have on US30, which don't worry, I'm going to explain to you in more detail when we get to that chart. Volume and volatility. We've had a lot of the Federal Reserve information priced in. The expectations of bad data is very known and priced in. We had the end of a business month and start of a new business month with some holidays that started out this new week as well in terms of Canada and North America. So we do have lower volume and volatility to start the week, I personally see that the second half of the week after Wednesday will see a lot more increase in volume and volatility with the various central bank statements we have later in the week. Now, before we do our individual analysis and observations of dollar index, equities, Japanese yen, and volatility index, which is going to give us sentiment information and correlation information, we want to understand what economic events we have on the table. So, August 2nd, overnight, we have the Reserve Bank of Australia cash rate. Interest rate decision where they're expecting a 50 basis point rate hike. This is very well expected, very well known. Normally, a rate hike would bring strength to the Australian dollar, but we have to understand that a lot of these rate hikes by central banks have been well expected and priced in, so it might be a buy the rumor, sell the news type of play in the short term. At 2 a.m. Eastern, we have some house price information from the UK. Not expecting too much impact from that at all. 8 a.m. Eastern, milk auctions from New Zealand. Not too much impact. 9:30 a.m. Eastern, global manufacturing PMI from CAD. Expected to be lower than the prior of 54.6. 10 a.m. Eastern, JOLTS job openings. Expecting to show a slight decline from previous high figures. And then we just have some labor market data from New Zealand tomorrow, Asian session. So not that much of important information overnight or through London or North American session. Really, the most important data is just the Reserve Bank of Australia rate decision overnight. Other than that, this economic data is pretty much well expected, priced in information. It'll just have a quick little lower time frame impact. Nothing long standing besides the Australian cash rate on AUD. But something you do want to keep an eye out for is we do have some Federal Reserve speakers tomorrow talking about monetary policy, talking about U.S. current economic state, which is more important during tomorrow's New York session. Charles Evans talking about U.S. economy at 10 a.m. Eastern. We have the Federal Reserve Bank of New York issuing its household debt and credit reports, which household debt and household overall consumer debt is very, very high and increasing. Later in the afternoon, we have Bullard talking about monetary policy and current economic situation as well. Okay, now let's do some market sentiment analysis. Sorry, I just got a little bit of allergies. So, the reason in terms of market sentiment why I like to look at the US dollar is because the US dollar is your global reserve currency, global business currency, and holds weight as a safe haven currency as well, and is primarily dictated in terms of its movement and how order flow will enter the dollar from an institutional perspective based on the actions of the cartel of the currency. You might ask, Jeev, who's the cartel of the currency? The fucking central bank, Federal Reserve, working in hand with the US government. Their decisions on money printing and increase of supply, rates, tapering, stimulus, all of that in terms of monetary policy is the main driving factor of dollar supply and demand, as well as how institutions down the line will adjust their order flow algorithmically in the dollar. The reason why dollar has been so bullish ever since we hit this very strong demand zone is as all of the interest rate cuts and money printing was priced in, what we had happen over the last year and a half was the Federal Reserve start to switch their monetary policy stance to a more hawkish tone, starting about tapering, starting to give tapering rumors, starting to give rate hike rumors, actually increasing rates, continued expected rate hikes, continued tapering, and so forth. So the main reason why dollar has been so bullish is a hawkish rate hike cycle by the Federal Reserve. They're the cartel of the currency. All of the institutions, all of the investors down the line, they're going to follow the waves created by the cartel of the currency. But just because you have that information advantage in the main macro sense here, doesn't mean you don't have periods of downside that occur, which is your simple transactions of every time you have significant highs printed by buyers, you enter some type of corrective phase as buyers liquidate positions, and you have sellers jump in, provide that exit liquidity, creating these short-term pullback phases. What we've seen on US dollar is we've hit 20-year historical highs at 109. A lot of the interest rate rumors and expectations for July in previous months were priced in ahead of time, and the market is well adjusted to it. The last FOMC had to buy the rumor, sell the news impact, because 75 basis point rate hikes have been priced in the month prior and was very well known. Wasn't any new information or events being brought to the table. And we've had weakening US economic data. Which also is a fundamental factor for short-term dollar weakness. Now, everybody pay fucking attention right now. The correlation between trading instruments isn't a one-to-one correlation between dollar and equities. It isn't a one-to-one correlation between dollar and gold. The correlation is everything in relation to the Fed rate hike cycle. Listen, very importantly, okay? The reason why dollar has been bullish, gold has been bearish, equities have been bearish, and of course your dollar pairs bearish that we look at is because of Fed rate hike cycle information. Right? Now, as this information has gotten priced in, you're going to see a similar correlated impact. As this information so far from the short-term perspective has been priced in, now instead of seeing dollar bullish, you're seeing dollar short-term bearish. So if the Fed rate hike cycle information, the July expectations, the 75 basis point rate hike, if that's been priced in, and we're also having weakening US economic data in the short term, what you're going to see happen is pullbacks on stock market, pullbacks on gold, pullbacks on GU and EURUSD following the inverse of this information. Does that make sense to everybody? Because now look, the same time that dollar has been so bullish and you've only had short-lived pullback phases, you can see that's because of the Federal Reserve rate hike cycle. At that same period of time, gold has been extremely bearish, and the same time a lot of that Fed information has been priced in. We had the expected FOMC, we have worsening US economic data. Now you can see from the lows, gold is pulling back. From the lows, GBPUSD is pulling back. From the lows, EURUSD is in pullback structure. And from the lows, we have a bear market rally on equity markets here. Is everybody following along? Yes or no? Or do you want me to repeat that again? Let me know in the chat. I can see the chat right now. I'm not going to answer these retard questions about people who don't know how to make a Vimeo account. If you can't make a Vimeo account to join the private channel, don't bother joining. You're too stupid. Okay? So don't worry about it. Okay, so remember, the main reason why dollar has been so bullish, the main reason why dollar has been so bullish, why gold has been bearish, why the stock market has been bearish, why dollar pairs like GU and EURUSD has been bearish, is because as the world reserve currency and business currency, and also the main leader of the central banks, the Federal Reserve rate hike cycle is what's the information that's been getting priced in. As the different Fed rate hike cycle information gets priced in, you have these pullback phases that occur. These pullback phases, they're not correlated with the trading instruments one-to-one. It's correlated with the Federal Reserve monetary policy and what's been priced in and what's new events, right? The reason why gold has been so bearish, driving down from 2,000 an ounce all the way to that very strong institutional monthly demand zone at 1680 an ounce, is Federal Reserve rate hikes. as the rate hikes got priced in, as we had the expected 75 basis point rate hike, we're having a pullback phase occur. No, Wasim, you fucking retard who can't even make a Vimeo account. Gold is still bearish on the higher time frames. Gold is very well known in how it behaves as a trading instrument that from significant lower lows, as fundamental information gets priced in, you enter what is called normal corrective and pullback phases. This pullback phase can still come to the 1800s and still be perfectly bearish, retesting previous significant lows, as you can see here and here. Yeah, do you guys get what I'm trying to explain to you? Right? Yes, in the short term, gold is bullish and is still potentially bullish up into the 1800s, right? But that does not mean the higher time frame is bullish. Same thing when we come here and we look at the stock market. Look, the stock market has been bearish ever since these all-time highs have been peaked here, right? And I want to show you guys something. This is going to be a big educational webinar, and then don't worry, I'll give you guys the trade ideas for the horny hyenas after, okay? Just pay attention. You're going to learn a lot. You're going to learn as much as you can from this webinar, and if you go put in more effort yourself. So now look, the stock market peaked its highs at 36,000 here, right? Ever since that point, we have been in a bear market on equities. Yes, you can say in the short term, gold in the stock market is bullish, but the higher time frames are still very bearish. I want to show you guys something now. Now let's go. Now look at the bear market that we're currently seeing in this 2021, end of 2021, 2022 phase. Let's go look at what the bear market looked at in 2008. So I'm going to give you guys a diagram here, right? Double top signaling no more buy orders. Overall bearish structure forming as sellers print significant lower lows. You have these short-term pullback phases in bear market rallies where institutions grab the dip and they also trap a lot of buy-side liquidity. Do you understand what I'm saying? So even if the stock market comes to 33,500, it still has a lot of potential to continue this overall run due to the fundamentals and still be revisiting these lows and continuing lower. The bottom in the stock market is not in yet, right? When you're looking at gold on the higher time frames, when you're looking at the same historical repetition of 2008, is still bearish. All of the bullish upside is done. It's been priced in. We're having the same repetition of the 2013 taper tantrum here. Just because we had a short-term bounce from this very key demand zone, very similar to this situation here, where we didn't instantly break, doesn't mean that gold is higher time frame bullish just yet. Gold would need to be trading above the 1800s to be higher time frame bullish. Otherwise, all you're having take place is a short-term pullback phase. Let me ask you a question then for everybody who says gold is bullish. Was gold bullish here during this run? Was gold really bullish here? If gold was so bullish during this period, why did it overall just collect sell-side liquidity and come down? If gold was so bullish during this period here, why did it still just end up collecting more sell-side liquidity and come down? If gold is so bullish here, it's just going to go to 1800, and what do you think it's going to do? It's going to grab more sell-side liquidity from a better price point of interest and come to revisit these lows again. Does that make sense to everybody? All you have take place is sellers drive price down to a significant lows. The fundamentals of rate hikes at that period of time get priced in. So let me label this for you fucking retards even more. Fed rate hikes, Ukraine priced in, downside. Move, priced in. More rate hike signals. Move, priced in. More rate hike signals. Move, priced in. Because 75 basis point was priced in, Wasim. You fucking dumb bastard. You guys, if you don't know basic concepts, I can't teach you the rest, right? As you have sellers drive price significantly lower from better price points of interest, they liquidate positions out of the market as the information gets priced in. For them to liquidate positions out of the market, you have a pullback phase occurs because you need buy-side liquidity for the sellers to exit out. You have then what is called a corrective pullback phase here. Do you understand? Right? This is just sellers liquidating positions from better price points, driving into lows, buyers jumping in to provide that exit liquidity in the short term. You revisit previous key price points of interest, and then still have overall, we're going to have more rate hikes by Feds. And by 1800s, you're going to turn back bearish here. How can you not understand this very basic sequence of events, continued fundamentals of Fed rate hikes, how pricing in and correct? Yeah, I'm gonna fucking burst a blood vessel. My IQ is far too high for the general population to communicate with the day-to-day retards. You know what I mean? Just to be completely honest with everybody. Yeah. You know what I mean? So anyways, I still see that gold in the short term can see some upside up until we reach back into the 1800s before seeing we go back into better sell price sensitivity areas of interest. Do you understand what I'm saying? Gold in the short term is bullish just in pullback structure against higher time frame bearish macro bias. Okay? So, same thing when you're now, okay, listen. Let's do a test here. Everybody reset. Everybody who saw reset, okay? If you don't think gold is bearish here, as sellers are consistently printing lower lows, right? The same people who think gold is bullish right now, what do you see when you look at this GBPUSD chart? Huh? Is GBPUSD overall bullish, or is it just having a short-term correction and pullback phase from new lows? When you look at this EURUSD chart, is EURUSD overall bullish, or is it simply having a pullback phase from new lows? Right? When you're looking at the gold chart, is gold here overall bullish, or is it having a pullback from new lows? Right? When you're looking at the US dollar chart, is US dollar overall bearish, or is it just having a pullback from new highs being printed? You can't even spell the word monthly, you dumb bastard. Why would anybody listen to you? Yeah, and perfect solution. Like I stated to everybody, read the first thing, read the third thing in this point here. Pullbacks and corrections of higher time frame trend across the board. When we're looking at the Japanese yen individually here, is the Japanese yen higher time frame bullish, or just having a short-term pullback from the lows? Does everybody understand what we're talking about? No, BTC pumping, what the hell? Right? Overall, Japanese yen is bearish. Okay? You're just having pullbacks. You don't want to marry these pullbacks and get trapped because pullbacks are very normal. All right? So what we are playing across the board is potential still gold pullback to at least the 1800s before we see more sell-off, right? Listen carefully. On GBPUSD, I could see the pullback potentially come up to 1.26 before seeing the sell-off. So short-term pullbacks, right? Is everybody following along now? On EURUSD, we could get the potential pullbacks to 1.05 before seeing more sellers in the market, right? On dollar individually, we can easily get the pullbacks to 104 before continuing back bullish again. On the stock market, we could easily still get short-term upside to around 33,500, 34K before seeing some more sell-offs again. Does that make sense to everybody? We currently have pullbacks and corrections against main higher time frame trend. Give me a 1 in the chat if it makes sense. Give me a 2 if you have no clue what we're talking about. Okay, so now this is very important. I have a question for everybody in the chat. Is pullback structure as clean as the main higher time frame trend moves? Whenever you have pullback structure occur, for example, let's look at gold. Let's look at this, right? Let's measure this. Let's look at this. This gold impulsive downside move was from 2060 an ounce all the way to 1920 an ounce in under 2 weeks. Okay? So the impulsive downside move with trend was very strong, very impulsive, much stronger volume, and in a shorter period of time. Please listen to this. It's an important lesson. Whenever you have main market movements with trend, the main volume plays with the higher time frame trend, it's always much stronger price action, way more impulsive movement in a way shorter period of time. Now look, this correction, which was not even the same size of the move, was a pullback in corrective phase that almost took a month and a half. And then same idea, as the sellers jump back into play, boom. Then you can see here a corrective and consolidation phase for almost 2 months. As the sellers come back into play, boom, new impulsive lows in a couple of days. Same type of idea here. This pullback phase up into the 1800s and 1820s, the corrective phases, even though we have to adapt to it accordingly, it's always a lot choppier, it's always a lot messier, and it always lasts a lot longer compared to the actual impulsive moves with trend. Does everybody understand that lesson? Does that make sense to everybody? The secondary phases of market structure, aka the pullbacks against the higher time frame trend and the consolidations, they're always a lot slower, they're always choppier, they're always messier, and they always last longer than the impulsive moves with the main higher time frame trend, right? This is the example with gold. You can see the bearish impulsive moves are very strong, very aggressive, just in a couple of days, maybe a couple of weeks. But the pullbacks are very choppy and take weeks and months to complete. Now, if everybody understands that, This is where we have to be very adaptive as manual retail traders, because you can start to get very mixed up in this bias. What I suggest to everybody is, if you're playing pullback structure, stick to one bias in the pullback structure. Let me give you an example. Let's say you have this pullback structure occur here. You can see you have both up and downside moves. Let's just say you have this pullback structure occur here. You can see you have very aggressive downside plays as well. Not as aggressive as the higher time frame, but still active there. I suggest in the pullback structure, stick to the pullback bias until the higher time frame plays are back into action. So that means with this current pullback structure on gold, I'm primarily going to be sticking to the buys only, no matter how choppy it is. If we get a pullback to 1740, I'm still going to be expecting buys. If we start to consolidate, I'm still going to be looking for short-term buys, all the way until we come to better sell-side liquidity zones, or all the way until we're breaking back into the lows again. Does that make sense to everybody? No, the volume indicator says it's low volume. Now, what we're talking about here in terms of lessons, look at the same type of ideology of impulsive moves with higher time frame bias compared to corrective structures. Look at GBPUSD, right? Look at some of these impulsive downside moves with the higher time frame bias. The impulsive downside moves, they last a couple of days, they last a couple of weeks. And then look at the corrective structure, how long it may last. The consolidations, the pullbacks, right? So now, pop quiz. On GBPUSD, on EURUSD, on gold, on the US stock market, and on US dollar, what current phase of market structure are we in? And what phase of market structure are we going to be adapting to? If you said pullback, you're right. If you said correction phase, you're right. 100%. Right? 100%. Right? So we're going to use those correlations to our advantage. Now let's bring this information together in even more detail, right? What we can currently see is, as previous similar situations of pullback, we can mark out some structure here across the board, right? This pullback on dollar can easily extend to 103 previous highs in demand zone before seeing any further upside back in play. If we don't break this corrective bearish structure, we're going to be playing a short-term bearish bias on the dollar, which fundamentally is going to translate to some short-term upside on gold, short-term upside on GU, short-term upside on EURUSD, bears on USDCAD, and a bear market rally, short-term bulls on the stock market, right? Unless we have dollar finding a support and trading back above 107, we can't confirm that higher time frame buyers are back into the scene just yet. Does that make sense to everybody so far? So we don't have, in terms of the green bias, we don't have this yet. We don't have this yet. We don't have this yet. What we do have is the fundamental information priced in, pullback phase. Fundamental information priced in, pullback phase. Fundamental information priced in, current pullback phase active. Hopefully, don't mind my jokes, don't mind my roasts, don't mind my aggression in my tone. Hopefully you guys are paying attention and learning a lot, or it's at least opening your curiosity to want to learn more about these markets. What pricing in means, these fundamentals and information advantages, how pullback phases and impulsive moves occur, how to analyze market structure, mining up trade ideas, and everything else we're talking about. Hopefully you guys are still learning a lot. Okay, so now let's go back and bring this information together for some trade ideas. When I'm looking at gold here, we're currently in the short term playing some gold buys, like I said, at least up until the 1800s, where I expect a sell-off potentially at the 1800s. What we can currently see is some more refined pullback structure being formed. Rejection at 1680's monthly institutional demand zone as the interest rate rumors and information was priced in, and we had very bad economic data. New intraday high printed, accumulation of buy-side liquidity in this consolidation zone. New intraday high printed, where even if we get pullbacks to 1747, I would still be looking for some short-term buys on gold up into the 1800s. So green boxes are buy zones. The new daily candle just making a little bit of a pullback, coming above 1772, breaking above 1781, still looking for gold buys. Now, keep in mind the trader psychology and understand that you're playing a pullback phase against higher time frame trend. Let me show you an example of another pullback phase and we'll come back here again. From this significant low that was printed here, you can see gold had an extended pullback phase all the way into the seller side liquidity zone at 1870s. But within this pullback phase, you can see very choppy movement, aggressive downside moves that occur all the way until the sell side liquidity is loaded in and you have your continuation plays with higher time frame trend, right? Same type of idea here. You can see this pullback phase lasted for almost the middle of March all the way until the end of April. Within this pullback phase, you had a lot of choppy downside moves until you revisited the better sell side zones and had sellers come back into play. Now when we're coming into this situation here, it's the same type of idea. I'm not expecting smooth and steady, clean upside to 1800s. I'm expecting the upside to be relatively choppy, having a pullback to like 1740s, maybe going up to 1800 once, coming back to 1770s, revisiting 1820s, then finally getting our sell-off and exhaustion maybe mid-August. Is everybody following along? Does that make sense to everyone? Right? Even though we're looking for gold buys, don't expect straight impulsive buys straight to 1800s. That would be a blessing. That would be a bonus. What we have to do is we have to reference other previous phases of pullback structure and understand how those pullback structure behavior occurs, right? So we can't have the expectations of just smooth and steady buys. We have to have the expectations that the pullback phase is going to be like this. That the pullback phase is going to be like this. That the pullback phase is going to be like this. Is that clicking for everybody? It's not going to be as smooth and steady as the straight sells with the higher time frame bias back in play. And trust me, when we start to notice the higher time frame sells come in play, it's going to be very, very smooth and steady that way. Okay, so now gold trade ideas. Short-term pullback phase, short-term buys to the 1800s. Green boxes being buy zones. I would only take any safer sells if the buys are invalid, breaks back below 1740s. Otherwise, pullback buys, these white lines are higher time frame key levels based on monthly, quarterly, and yearly price points of interest from a historical standpoint. That's why they have great reactions here. When buy? When your mom gives you enough money to fund your $100 trading account. So go ask your mom for some money. Go ask her if she can give her hard-earned wages to you to put into some fucking shitty-ass trade for you to follow up and have no knowledge in. So yeah, go ahead. Be a part of the 90% of retards. It's my honor to lead you that way. Let's zoom in even more on the intraday time frames here. Right now, we can see that I can't expect any downside unless we break below 1760. 1760 would be a deeper pullback phase to buys at 1747. Otherwise, just pullbacks to 64, holds above 1772, breaks above 81. We're still looking to take short-term gold pullback buys up into better sell zones in the 1800s. Gold, done. Same type of ideology now we're going to bring to GBPUSD, EURUSD, and USDCAD. In the short term, we're playing some pullback structure on GBPUSD as long as dollar stays relatively softer. But the pullback structure is always choppier compared to the higher time frame main bias plays. Pullbacks to 1.2165, breaks above 1.23, breaks above 236, still looking for intraday GBPUSD buys as long as UK equities stay relatively hot, and as long as we have dollar staying bearish when we're looking at dollar index on the intraday time frames. EURUSD, what have I taught now? I want to see what people remember lessons from previously. What have I taught you that the two ways you can have a corrective phase? What are the two ways you can have a corrective phase? Remember, against higher time frame trend, what are the two ways that corrections can occur? Either you can have a pullback or you can have a consolidation. It's one or the other, right? It's one or the other. What we're currently having on EURUSD from the lows is a combination of both, a pullback and a minor consolidation phase. If we have continued dollar weakness, a break above this consolidation zone, we can also see continuations to the upside. No, GJ is bearish because we're having pullbacks against higher time frame trends. Rate hikes by the Bank of England is already well known and priced in with the rumors we've had over months, and yen has individual strength due to market fear and worsening global data. At the actual Bank of England rate decision, GJ may still stay bearish short term as the 50 basis point rate hike or the rate hikes expected are very well known and priced in. Right? Majority of actual rate hikes at the actual rate decision doesn't have the impact it's supposed to because the information's been priced in months ahead with the signals and rumors that the central bankers give. I'm going to talk about GJ last. So, if EURUSD retests 1.02, holds above 1.025, breaks above 1.034, short-term pullback phases to go up to better higher time frame sell zones of interest. USD-CAD is more of the inverse of our dollar pairs, where dollar is the secondary in those quotes. It is the primary here. Instead of seeing a pullback from the lows, we're seeing a pullback from the highs, which is extremely common on UCAD and can easily come to 1.27 demand zone before seeing more buyers in the market. So on USD-CAD, pullbacks to 1.29 sells, breaks below 275, breaks below 1.27, adapting to pullback phases, short-term dollar weakness, technical repetition and a lot of the fundamentals that have kept dollar so bullish being priced in, aka the Fed rate hike cycle and information that's already been absorbed with the 75 basis point rate hike and more. We are going to have to see new signals by Fed speakers of more rate hikes to come for the next FOMCs to see dollar turn bullish again and so forth. Jeeve, when Bitcoin is essentially our new currency, since you're so hateful, I expect you to farm with technology from the 60s. Bitcoin is pegged against the US dollar. Anything that's pegged against the US dollar cannot be a currency. You have to use US dollars or another currency to buy Bitcoin. There's your argument done there. You have to use a real currency to buy Bitcoin. Bitcoin is classed as an investment vehicle, as an asset class. Just like oil, just like stocks, just like any other investment vehicle. If Bitcoin was a currency, you wouldn't need other currencies to buy it. You fucking dumb piece of shit. If Bitcoin was a currency, I could take it to the store right now and buy whatever I want. It's not a currency. It's an asset class. It's an investment vehicle. It's to pool retards in like yourself. People are so stupid, yo. So stupid. Anybody who's made millions investing into Bitcoin has had to withdraw it in their currency to use that money in real life. Fucking idiots, man. Okay, anyways, US30. I'm expecting some short-term upside to 33,500. Listen, all I can say to you is I know more about Bitcoin than all of the Bitcoin supporters. I'm the one who called the crash 8 months ago. I called the crash from 60,000 all the way to 15,000, and we hit 20K. So suck my big hairy brown balls. Did you call that? No, you didn't. Did you short it? No, I didn't make money off it. So I understand economics very well, to the point that I called the crash ahead of time with full proof, full breakdowns on this YouTube channel. Fucking retards. Yeah, my balls are pretty hairy at the moment. Correct. Haven't done too much manscaping lately. Anyways, let's get back to what we were talking about. US30. I'm still expecting some short-term upside on US30 as we have less demand in the US dollar. We have volatility index very bearish. I have proof. I'm telling you, I have proof. You can go to my telegrams, my Twitter, go back 8 months ago, go to the YouTube webinar itself. There's proof. That's what we're trying to explain to you. US30 pullbacks to 32,400, breaks above 33K, breaks above 33,200. I'm potentially starting to look for sells back in this 200-point range from 33.5 to 33.8, right? But short-term buys up to those better sell side price points of interest. Now, last but not least, our best friend, GBPJPY. What we can see for the start of the new month is that we don't have enough buy-side liquidity, fundamental information advantage, or reasoning to break above 166. We're coming back down to these 161, 160.8 demand zone while respecting intraday bearish market structure. The same time, the secondary in this currency pair, the Japanese yen, is short-term bullish, right? So the Japanese yen is just short-term bullish against higher time frame bearish structure, where it can still come to 77, even 78 before turning bearish again and revisiting to these lows. I personally see some short-term GBP downside due to the upside not having enough buy-side liquidity to continue higher, buyers liquidating positions for the end of the month in the new month period, Japanese yen short-term strength, Bank of England information priced in so far, and weakening UK and global economic data. Okay? So on GJ, I could obviously on the higher time frames, we understand GJ is very, very, very bullish, but GJ can easily have higher time frame pullbacks to the 159s, 160s for the new monthly period before continuing bullish again. You can also see that it's very common when you don't have breaks between significant price points of interest that you can revisit demand zone areas very frequently before continuing bullish again. As you can see here, as we can also see with this area of interest around the 158s. Does that make sense to everybody? So yes, GJ is higher time frame, very bullish still. Yes, we have these highs printed by buyers, but it's very, very common with the market waves that once the information is priced in, you enter these higher time frame consolidation and pullback phases. We want to watch this pullback level by level because if we start trading below 161 flat, we have a lot of potential to go to the demand zone at 158 for the new monthly setup period before continuing up. Remember, this new monthly period just started. Look, right? So this new monthly period, if you're looking at these monthly candles and how GJ moves, for example, the sequence of events here, 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 if we had a new monthly pullback to, let's just say, 158 here, that would not be out of the ordinary at all before collecting more buy orders and still being bullish on the higher time frames due to the difference between Bank of England rates and Bank of Japan. Bank of England being a lot more hawkish, Bank of Japan being a lot more dovish, right? So when we're looking at GJ, I'm just personally short-term bearish if we trade below 161, just expecting some of this bearish market structure and sequence of events to still be respected, potentially driving us down to these better demand zones before seeing more buyers in the market. Otherwise, I would need to be trading above 162.5 to be jumping back into higher time frame buys. Does that make sense to everybody? What do doves have to do with this? Holy shit, you guys are stupid as fuck. Bank of Japan being dovish is a description of their monetary policy stance. It's not about the actual bird. You guys really set up accounts with brokers and deposit money into these markets? That's fucking insane. That's straight madness to me. Pullbacks to 162. I'd still be looking for some GJ sells. Hold at 161.5. So he said, what do doves have to do with anything? What do doves have to do with anything here? Are we talking about the zoo? My God. Oh man, I'm crying a little bit. You guys are making me laugh too much. Oh, shit. You guys are fucking hilarious, man. That's why I have fun doing these breakdowns. Oh yeah, did I tell you guys? My live streams, scalping live streams are coming back too now this week. I'll probably do the first one again on Wednesday or Thursday, alright? So I'll see you hooligans there. I'll see you hooligans there again. Okay, anyways. Short-term downside sells on GJ until we reach better demand zones before continuing back up bullish. Otherwise, we could only jump back into higher time frame buys on GJ, breaking above these rejection points and trading above 162.5. Right? Holy shit, everybody. I'm tired. This webinar has been like an hour long. We went through a lot of ups and downs, a lot of trials and tribulations together. over this last hour. Very funny, very entertaining times. But anyways, let's summarize. Let's summarize what we discussed, okay? So, we went through key points in focus. Less volume and volatility because we're starting out a new monthly business period. A lot of the fundamentals priced in. Because a lot of the central bank monetary policy sentiment is priced in, we're getting pullbacks. We're getting pullbacks and corrections against higher time frame main bias trends. Pullback on GJ from the highs. Pullback on gold from the lows. Pullback on GU, EURUSD, and stock market from the lows. We are playing those pullbacks in the short term. We're playing those corrective structures. We have worsening global economic data, and we also have keep an eye out on your news headlines. Follow the Capital Hungry News Twitter terminal, because Nancy Pelosi, that old evil insider trading bitch, she's going to be in Taiwan tonight. She's going to be spending the night in Taiwan. I don't know when she lands there, but she's going to be in Taiwan. She's going to be causing some shit. So we're going to have, if we have more market fear come into the scene, I forgot to explain, no, I actually already did explain this. If we have more market fear come into the scene with any Taiwan tension starting to develop and any new events, gold will just be a bit more bullish and will play more pullback buys. GJ will be more bearish, but US dollar strength might come back into the table as a global safe haven and business currency. So keep that in mind there, right? We have worsening global economic data, geopolitical tensions. We went through market sentiment analysis. We went through volume analysis. We went through news headlines that are important. We went through key political things importance. What economic events are on the table. We went through fundamental and technical analysis through individual pairs. I'm freaking losing my voice here. Jeev, do a flex before you leave. Oh no! No, I can't. That's too much for YouTube. I don't want to make you guys too jealous. You guys are gonna be sad. Damn, this guy's got a beard. He's fucking handsome. He's rich. He's jacked. And he has high IQ and knows about the markets. Fuck this guy. I'm gonna send him a dislike. Oh man. Alright, anyways, everybody. The retard who couldn't make a Vimeo ID, I can't help you. Please don't join my service. Please don't come to my group. If you can't even fucking make an account, don't join. The retard Bitcoin supporters, keep supporting Bitcoin. Keep working at McDonald's. Keep depositing all your money into Bitcoin. Keep it up. Keep it the fuck up. Everybody else, I hope you continue to learn as much as you can. I'm always here to help you. Make sure to check out all of your other Capital Hungry resources and information for free. Okay, Hector, just to shut your ugly ass up real quick one time, right? Let's shut up Hector, everybody, together. Capital Hungry crypto market crash. This is from 5,000 views from 2014 ago.
What's going on, everybody?
This is me calling downside. Literally the first thing you see from 60,000 from 60,000 all the way down to 12,000 by March 2022. I'm a fucking beast savage. This is from August 2021, 9 months ago. Crypto market analysis, correction and crash coming. The very, very first screenshot is me calling from 60,000, a downside blow-off phase, completely fucking up all the retail traders, all the way down to 16,000 by March 2022. Yeah, that's what I'm about here. Yup.
And thrill and euphoria stage is when the public enters. Then you have the bull trap
you can
here,
go find the Bitcoin
anxiety denial stage, and the capitulation coming back all the way down to a despondency stage. So I don't think that crypto markets are going to die and fade out, but I do think that if we cannot return to the normal and break that price point, and then we break above, break below the bull trap area, we're going to come to the real price points of interest that smart money and institutional traders are going to want to get in. The institutional
All right, everybody, take care. I'll see all you next time.